Hello and welcome to Crux Investor. We caught up earlier today with Marz. He's the president and CEO of Wallbridge Mining. They're one of the larger junior miners on the TSXV. We talked to them about their achievements of last year, significant, plus their fundraise and what they plan to do this year, heading towards that Q3, Q4 Maiden resource. If you want our thoughts on the conversation, what he said they'd be able to do, and of course the company itself, you can find that at cruxinvestor.com/club. There's also detailed company reports on there with analysis. There are summaries of other interviews that we've done to save you some time. There are training videos to help you with your own diligence process. And of course, commentary from experts from all around the world on a variety of commodities and companies, which you might find interesting and useful. And why don't you go and join our thriving community of investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment at cruxinvestor.com/club. Sounds nice, right? We'd love your feedback too, so do give us a like. It'd be appreciated. Leave your comments below. We'll get back to absolutely everyone. And of course, if you want to see precisely what we talked about today, do take a look in the description below. Marz, how are you, sir?
I'm doing well, Matt. How are you?
I am excellent, as always, as always. Now, first of all, I got to ask, Marz, that's a great name. I love the name.
Oh, thanks. Just like the planet.
Just like the planet. You sound so exotic already before we start. No. Well, look, so first of all, where in the world are you? Tell me that for a start.
I'm in Sudbury, Ontario, just about 4 hours north of Toronto, Canada.
Right. So up near the project, keeping an eye on things.
Closer, yes.
Fantastic. How long have you been up there?
Well, I've lived in Northern Ontario for over 30 some odd years, and between Timmins and Sudbury, and most of my career has been in Northern Ontario and Northern Quebec. So, and married somebody from North. So.
What are you? Are you an engineer, a geo? What's your background?
I'm a mining engineer by trade.
Okay, fantastic. Okay. Well, look, we're going to hear about the Wallbridge story today. I'm going to ask you some questions. Before we do, can you just give us a 1-minute summary of what it is that you are? Sure. And then I'll kind of dive in with some questions about where you're going.
Sure. We've been exploring and advancing our Fenelon Gold property in northern Quebec that we purchased from Balmoral Resources in late 2016 for about $3.5 million in cash. We've not only demonstrated on this property that there is a potentially tier one gold asset, but we've also acquired Balmoral Resources last year and now control over about 90 kilometers of this very underexplored belt, where it's already shown to host several large gold systems, as it's evident from the D2 Lake mine on the Ontario side and our Fenelon Gold on the east side, and also our Martiniere, which is somewhere in between the two. So not only have we got the potential on this Fenelon for a large resource, but we also have this organic growth potential on this entire large package of land in Quebec. Quebec is one of the best mining jurisdictions in the world. And notwithstanding all of our gold assets and our, in this belt, we also have these nickel copper PGM assets in Sudbury, Ontario, as well as in Quebec. So this year we have a very large exploration program. It's over 170,000 meters of drilling. We have the exploration development that we're planning to do underground, as well as the maiden resource that we intend to bring out by the third quarter of this year. So with the program that is about $75 million, with our cash balance at the end of the year last year with $85 million, is a very fully funded program. So with the prospective properties in the right jurisdiction, supportive shareholders like Eric Sprott and Kirkland Lake Gold, 170,000 meters of drilling, maiden resource this year, we basically check the box on all of the investment criteria that people look for.
Except share price. It's been on a slide for 5 months.
The share price has been on a slide, but that may have a lot to do with the fact that we're at the stage where the company is currently in the process of completing the maiden resource, and as well as the gold price fluctuation, and somehow exploration companies are also currently with the wave.
Right. So I agree with you. There's a lot of things that are going to be happening this year, and you're financed to be able to deliver them. And I think the long-awaited maiden resource, it will be a big part of this. But can you help me? I need to understand a little bit about you, the way that you think, who we would be investing into. So you talked about buying an asset for $3.5 million in 2016. Your market cap today is 560. So something's gone right. The plan you set out to deliver, is that the plan you've delivered today?
Oh, absolutely. I believe so, and more. I mean, obviously, along the way, the surprises came. So back in 2013, we decided to actually transition the company from an exploration company to a producer. As a junior company, we wanted to talk to people about their non-core assets. We couldn't really do that because people don't trust some juniors having delivered some of these. So we actually put our own project into operation. It was a small project between 2014 and 15. We managed to generate about $4 or $5 million free cash flow for a market cap of $5 million at the time. With that success, we were able to talk to others. So that's when we assembled a team, an M&A team, to look at projects. We were looking for things. We knew that at a $5 million market cap, we weren't going to find a 1 million ounce plus deposit. We were looking for things that were high margin, but have a large potential for growth. Fenelon came across our radar. So we discussed that with Balmoral. It was a non-core asset for Balmoral at the time because they were concentrated on the Martiniere as well as the nickel asset on Grasset. So we purchased this property not because of its 40,000 ounces, because throughout the due diligence, we realized that there's a lot of areas where they had drilled holes along outside of that 40,000 ounce area. And it had a lot of potential for growth. It was in the right environment, right near the Thunder Lake Deformation Zone. And our guys basically found about a dozen targets at the time. We continued 2017 and 2018 to expand the original resource, laterally as well as to depth. But along the way, we knew we had these targets. Late 2018, just before Christmas, we decided to drill this hole number 51 to extend that hole beyond what we were finding. And we discovered Area 51. In early 2019, following on Area 51 discovery, we found out the depth extensions of the Tabasco, which we now call Lower Tabasco, which is the most endowed portion of our resource to be coming out. So there were some discoveries along the way. So here's a 10 square kilometer property that we've continued to demonstrate that it has a large growth for a large resource. But more importantly, we've also acquired Balmoral. So that's basically the track record of what we've done so far. And we believe we're on track to be able to come up with this maiden resource that we think it's potentially a multi-million ounce deposit on the property. Now, what the number of that maiden resource would be obviously is determined based on the amount of drilling that we're going to be continuing to do before that comes up.
There's an interesting dilemma going on here because you've got a lot of retail. Institutions aren't interested, yet you're finding it easy to raise money. What's going on?
Well, I mean, management's track record, the success of exploration really determines what your access to capital would be, particularly when you're in a good jurisdiction. If this project was in somewhere outside of Quebec or outside of Canada, probably would have had a more difficult time trying to raise money. But it's a business plan that we've had. We said that we wanted to, in the initial stage, we had just the Gabbro, and we wanted to put that into production and become a plus 60,000 ounce per year producer. Since the discovery of Area 51 in Tabasco, we've realized that is not necessarily the plan because the project is much larger than that. So as a result, the market believes. Now, obviously, as you mentioned, we only have about 10 or 11% holdings by institutions, and the balance of that is some of the supportive shareholders or strategic shareholders like Eric Sprott, Kirkland Lake Gold, or William Day. And the balance of that is in retail. But we believe that the institutions will come around.
Right. How are relations with Eric Sprott?
Our relation is great. Eric Sprott started becoming our shareholder about August of 2018, and he has since been a supportive shareholder. He's continued to participate in our financings all the way to now.
Should we just talk about retail? Because they seem very frenetic and interested in what you're doing, but they don't feel you're talking to them very much.
We've been pretty transparent with our disclosures. We have continuous disclosures. And obviously, when you're doing the amount of drilling that we're doing, the market expects us to continue having these press releases every 2 or 3 weeks. But the fortunate or unfortunate part of that is some of these holes are 1,000 or 1,100 meters, and more than 60% of the holes need to be sampled. And it's not that easy trying to find, put sections of the hole released as it comes from the lab, as assay labs. So that's one of the reasons we need to make sure that we have the complete results of a hole before we disclose that. So that, we've been doing a lot of interviews. We've been exposing ourselves with respect to the story of Wallbridge to the institutions as well as to the retail. We continue to do that along the way. And when the assay results come or we have, newsworthy material, it'll certainly be disclosed.
Right, because obviously you've got to disclose any significant disclosures. If you think there's something meaningful, you must say. come to market with that immediately. And they're used to these big high grade intercepts that you've been putting out most of the way along here. Is that something they can continue to see, or are you starting to see some bulk stories being played out as well?
I think there aren't a whole lot of projects that have continuously had 22 grams over 48 meters. There's absolutely, I don't remember. But what it is absolutely we're going to come up with the continuous, news on the assays that could potentially have the higher grade stuff, but also the bulk mineable material. Like some of the assays that we have with respect to, over 50 meters of good mineable grade, it would definitely demonstrate that this deposit has a potential for bulk mining resource. It's not, when you have 50 meters of 4 grams itself in a 2 meter wide, not mineable, but 50 meters of 4 grams is a bulk mineable potential. And there are a lot of mining companies that currently are doing at less grade than that in terms of potential production.
Right. And talk to me about the plan going forward, because I'm trying to work out, you're talking about putting a maiden resource out in Q3. So that's good news. It gives people a sort of sense of the scale of the potential scale of this, which is fantastic. But you've got a royalty company, Ely, who's got a royalty on some of your project. There's some good news here. I think it saved you some time. They're saying there's 3.5-4 million ounces in there.
Well, anybody can guesstimate what the resource ounces could be. I wish I could say that, but I don't know. Obviously, first of all, there's at least another 70,000 meters of drilling to be done to be included in the resource estimate that is coming out this year. More importantly, every company has their own internal evaluation, modeling, and trying to understand what the potential size is. But at the end of the day, it's always the qualified person and independent consultants that provide you the NI 483-101 report. So until then, we don't know what that ounces would be. But Ely or anyone else could certainly, do their own calculations. But unfortunately or fortunately, we will not be able to condone those.
Okay, so Ely doesn't know something that you know.
I don't know if they do. So.
Right. Okay. No, it's just a kind of question, because it's interesting. You get one public company saying one thing which is affecting their valuation, and obviously you haven't put any numbers out. And I just, I think it's kind of interesting that would happen. So the plan is you did 102,000 meters last year, and I know you've got 170,000 meters planned for this year. That's a lot of meters. And how many meters were there before 2020?
Roughly about another 70,000 meters before that.
Right. So you've got a significant amount of data to be able to put out this maiden resource. And sorry to keep honing in on this maiden resource, but it's a defining moment for you, because otherwise you're just an exploration play, right? You're just a $560 million exploration play. So people are excited by headlines at the moment, because that's really what they've got to work on, and some of these drill results that you put out. But are you being delayed in terms of the assays coming back? Because I think a lot of companies seem to be affected in terms of timing. No,
not particularly or substantially different than what we had last year. Obviously, over the past few months, the companies have been busy, and the COVID pandemic has not helped some of these labs with respect to the way they operate. We've seen a bit of a delay in some of the assays by maybe a week or two. Typically, it takes about 4 to 5 weeks from the labs to receive the assays, from the time you deliver to the time you actually get complete portion of that. And remember, these holes that I mentioned, they're 1,000 meters. So every week, whatever we've drilled in that week gets sent to the lab. But by the time the actual hole is finished and then get the full assays, there'll probably be that 4 to 5 weeks asked. We've realized that over the past 3 or 4 months, that 4 to 5 weeks has been extended by an additional week or two.
Right. Okay. So by the time you get around to putting the maiden resource out, you can have somewhere between 300 and 340,000 meters to work with. Is that right?
No, not quite correct. Because obviously, in order for us to come up with our resource estimate by Q3, we need to have a cutoff date. So currently, the cutoff date is sometime end of June, early July. So based on that, we expect to add another 60,000 meters, 55 to 60,000 meters of drilling into the already inventory of the drilling that we have.
Right. So what's the number that you hope to go out to market with? What's the number you'd be happy to go out to market with?
In terms of drilling, we're looking at about 230 to 240,000 meters of that drilling that has been done on the property to be included in the maiden resource.
But what's the number you're looking for in terms of the maiden resource? What do you think the market is expecting to hear from you?
Well, I wish I could say that. Obviously, I like it. I like more than less.
You know more than us. Good. But there's a lot of things in life like this. But you at the board level must be having these discussions going, look, we've just raised a stack of money. We're good for money for a long time now, right? You had a lot of cash. You raised another 60, whatever it was. Was it 62, 64 million?
Yes.
64 million on top, right? So you're good for cash on your drill program. But you must have had conversations like, if we don't come to market with more than 3 million, with 4 million, 5 million, the market's going to be upset with us. So you must have that number.
Well, like I said, the market has different valuations based on the market cap of the company that is in, that's evident. I mean, some people use some numbers of $50 an ounce. Some people use $150 an ounce, depending on where it is. By the way, I actually believe that most of the analysts who are looking at these numbers, they put everything in one basket, including whether there's a project in the middle of Andes or in the middle of, Saharan with a lot of, difficulties, and also in Quebec and Ontario. So when you really look at these projects, there's certainly a different premium being in Quebec with all the infrastructure, mining friendly First Nations, mining friendly governments. So I don't know exactly what the market is expecting, but we certainly are seeing this is going to be a meaningful maiden resource that's going to not only demonstrate what it has today, but also its growth potential in the future.
Okay, so again, I'm talking about communication here because it's really important. That's why we're talking today. You want to talk to the market more regularly, but every time you do, they come up with a new set of assumptions about what you should and shouldn't be doing. Now you've got all this cash. Can you just sort of ignore that noise on the line for a while? Just get on with business.
Look, we're an exploration company. At the end of the day, you understand that coming up with a maiden resource doesn't end everything. It's not as if you're going to come up with generating cash flow out of a maiden resource. As an exploration company, most investors expect that in the future, you'll need to get those funds or raise those funds in order to advance the project. So we obviously have a very fully funded program for this year, but you also need to opportunistically look at what is the next step to this? Regardless of whether your maiden resource is going to be satisfying what the market is expecting or not, you need to ensure that the future project, the rest of the project in the future is funded.
Yeah, okay. And talking of moments which most companies would be very happy marks they'd be happy to hit would be getting included on the GDXJ. For you, shares went the opposite direction. It's like, what was going on in the market? What was going on in the company? Why that reaction? It's bizarre.
Well, I'm not sure exactly what the reasons are as to why our share price had slid since the inclusion into the GDXJ. Obviously, it's a great accomplishment, if you may, to have been included in the GDXJ. There's no doubt in my mind. I mean, this is not a lot of companies do. But what is important for us is the fact that, and I expect most of our long-term retail shareholders understand that at every stage of the project, and you're looking at the Lassonde curve, you actually can see that fluctuation or flattening of the share price, at some point, because everybody's expecting the maiden resource. They're trying to figure out what exactly is the next step is. What's good about our company is the fact that we've got 90 kilometers strike length to this underexplored belt. So there's opportunities for us to bring ourselves back at the bottom of that Lassonde curve at the same share price that we are today and carry that increase to the next level again. So Fenelon, the maiden resource, will obviously answer the question on that itself. But this year, we're going to spend about 10 to 15% of our drilling on our other assets along the belt, which are Martiniere, on Grasset, as well as other properties. So those are all the reasons that when you really see in terms of what the companies, is this a one asset company, or is it going to be a multiple assets, which is what I believe it is.
Yeah, it's definitely, well, it seems to be, the story's being told is about a district-wide play, which is fantastic. And Quebec is a good province to be doing business. So,
absolutely.
It's all the signs are there for sure. When you kind of took over Balmoral last year, again, why did you feel you needed to do that then? Was it just a case, right, we need to be more than a one-trick pony with one asset, we need to expand this? I mean, what was the conversation at board level? Because, more work.
That and more. And I'll tell you exactly why. We were already seeing the Fenelon Gold System, continuing to go beyond the original 10 square kilometer boundary that we owned. We realized that Balmoral had those properties. In fact, for a while, we weren't even drilling near the property boundaries because we all sort of had an idea where those targets could be. So that's why we felt that around Fenelon itself, we certainly can demonstrate that we can show that the mineralization goes beyond it and potentially come up with even a larger project that we currently at that time had envisioned. But we also saw owning this belt is like having one of the southern Abitibi like Val d'Or to Rouen-Noranda about 100 to 120 years ago, because there really is 25 to 30 meters of overburden, and exploration really didn't start till the late 90s. So we saw potential for this district scale property that Balmoral owned. And they were really concentrating between gold and nickel for a number of years, for a few years on gold, a few years on nickel, and really did not have as much of a particular focus. And so that was one of the reasons we felt that it was the right time for us to do that. Our share price had improved, and it was a really right time to be able to acquire Balmoral and now own this district scale package that could potentially be seeing a lot of head frames, maybe not in my lifetime, but perhaps in the future lives.
Okay, and you've also partnered with Kirkland Lake Gold, or Kirkland Gold, right?
Kirkland Lake Gold is a shareholder of ours. In 2019, we always were looking for a strategic partner. The reason for that was not because of the financial strength, but also some technical expertise that we could draw upon from a strategic partner. That's why Kirkland Lake decided to do a funding into Wallbridge, and it was about 9.9% shareholding. Obviously, as a result of the acquisition of Balmoral, they couldn't participate in that. And in recent financing that we just did last year with $64 million, Kirkland came in with over $20 million to maintain their 9.9% pro rata.
That's interesting to me, because they've been sort of dropping a lot of companies around the world in terms of their positions as well. So they're being a little bit more selective about who they want to work with or who they choose to work with. That's quite telling. I think probably outside of your company is quite telling of who they've chosen to drop. Okay, that's interesting. So with regards to what's happening at Detour Fenelon, what can you tell us in terms of what's going to be happening this year?
So, as I mentioned, we have 170,000 meters. The majority of that drilling obviously is going to focus on Fenelon itself in order to infill as well as expand the existing resources. We've had about 10 to 15% of that, about maybe around 20,000 meters of drilling that we plan to do on this belt. There are two areas of focus for us this year. One is the Martinier, and Martinier was the deposit that, or the property that Balmoral had come up with a deposit of about 600,000 ounces. It had a component of open pit as well as underground, but really it was too small for an open pit and it was low grade for an underground. But when you really see Martinier, the majority of the high grade, in fact, we have it on one of our appendix sections in our corporate presentation. Most of the higher grade stuff was actually around the 350 meters, and there really isn't a whole lot of drilling below 350. So we certainly see Martinier as a high grade potential, much similar to our Fenelon. Remember, when I mentioned about targets on Fenelon before doing our due diligence, we followed up on one of those targets. There was some holes at our 1.5 meters of 22 grams a ton that we said, but this is part of this shear system that we need to follow. And that was actually at depth, about 350, 400 meters is our lower Tabasco. Same thing is happening on Grasset. Although Grasset already has a nickel deposit on it, it's got this large ultramafic system that comes right to the Sunday Lake Deformation Zone, already has some potential targets for gold, already has 80 centimeters of 145 grams a ton that has never been followed. There is a Grasset West with, a number of mineable grades over several meters of width that has not been followed because it was really focused on nickel. So that's another reason why we're looking at Grasset today in terms of its gold asset rather than its nickel asset. And I know a lot of our retail investors want us to carry on with the nickel because of the market with nickel and everything else. But what we really need to do first, understand, because it's only 2 kilometers from our Fenelon, and it could certainly add to the economics of Fenelon if you could have another deposit. So we need to address that first, and that's one of the reasons we want to put do some drilling on Grasset as well, following up on gold.
Okay, but you're a gold company, so you're looking at it from the gold perspective. You're right, there were lots of questions sent in with regards to Do you spin this out as nickel asset? Obviously, Sudbury's a big nickel region, and there's some big stories happening there at the moment, and nickel's on the up, probably all-time highs at the moment, I think, in terms of pricing.
Yeah.
But you're gold guys, so the focus is gold, gold, gold.
Yeah, we don't have any immediate plans to go to Grasset to drill for nickel. Obviously, at this stage, we want to answer Grasset's property with respect to its gold potential. With respect to our Sudbury assets, we've always said that we want to unlock the value. Today, we're not getting any value for our copper nickel PGM assets in Sudbury. We understand it, and we want to do it, but you do not want to spin out a company and a junior explorer becoming a struggling company that they're going to come back. It's like sending your kids away, and then every so often they come back for half the rent money or all of the rent money. So that's why we wanted to make sure it has a near-term to production asset before we spin that out. And that's one of the reasons we entered into this operating agreement with Sibanye-Stillwater to operate the Longming Canada operations, that they have the Denison property. We now own about 18% of that company. They were supposed to come up with the PEA and Maiden resource by the end of last year. They're a bit late, but we understand that in this quarter, we're going to have that. And with that, we'd be able to look at the spinning out of all of our Sudbury copper nickel PGM assets. And in the future, depending on what answers we get from Grasset, perhaps either do that separately through a joint venture, through a sale, or through putting it into this company, into the spin-out company, and get value for our shareholders.
Okay, but right. So the PGMs obviously is a very exciting time in terms of the market pricing as well. So there's potential for spin out there with Denison, etc. So that's okay, but not with Grasset, because that's got gold, and you want to manage and control that component.
So with Grasset, we want to answer the question of whether it has the potential for gold. And that's one of the reasons we need to do some drilling. I mean, the Grasset has a close to about 4 million tons of very good grade nickel asset. Obviously, it still requires additional drilling and exploration in order to expand that, because in that area, especially with base metal assets, you need to have a larger project than that in order to start a mine. But more importantly, it has that potential to be able to come up with a gold resource. And so that's one of the reasons we're sort of having to drill that this year to understand it. And I'm hoping that we'll get that answer this year.
Okay, so do you think it's fair to say the retail market is giving you credit for the nickel component, but at the moment you are asking questions and trying to answer them, perhaps don't value them as much?
Today, we certainly value it. Is in terms of the market valuation, we're not getting any value for it. So it's a matter of, obviously the market wants us to carry out our gold plan, particularly with Fenelon. And Grasset today needs to be answered with respect to its gold asset prior to us trying to do something with it.
I get where you're at, but I'm trying to say, do you think that the retail market is valuing it? I.e., today's market cap, today's share price is getting credit for the nickel? Zero. Nil pura. Okay.
That's right. And which is why we want to unlock the value of it. So it just takes time for us to do that.
Okay, talk to me about environmental. I know you're in Quebec, and I know you're in Sudbury, and it's lots of mining going on, and it's a walk in the park usually. But you still got to go through the motions. You still got to establish relationships. You still got to spend the money and the time, etc., on environmental, with the locals, with First Nations. So what are you doing?
Having been a consultant for many years, and I worked on behalf of the First Nations and on behalf of the companies discussing with First Nations. One of the things that I started when I came to Wallbridge was, regardless of where you are, you need to have communications at the beginning of the project, not when you really need the groups, regardless of whether it's the First Nations or the communities around you. Since then, since the beginning that we started in 2011, when I started with the company, we decided to have monthly report to our First Nation groups of what we did the month before and what we're planning to do next month. And that's been going on up to this day. Since the purchase of Fenelon, we were new to Quebec, and we decided to do the same thing. We now have weekly meetings with our First Nation group. We have close to 20% of our workforce is from the First Nation communities in Quebec. So we've definitely demonstrated that we're a corporate citizen with respect to our communities. And one of the other things that we have decided right off the bat that because we were new to Quebec, and anywhere we go, you have to shop local. So one of our policies in the company is that if you work in somewhere, it better be local. And that's what we've been practicing, and we've been continuing to do so.
Okay, fantastic. And tell me about the team that you're building up here, because you're starting to become a different sort of company. You're no longer really exploration, okay? It's moving to development, and you would hope fast track to some sort of production type vehicle going forward. So you're going to have to start changing. You've got a big board. You've got a big management team. And I know you're worth 560 million market cap, but it's, even by those standards, still quite big. You're going to have to start changing people around soon, aren't you?
Sure. So let me address the management side of it first, because obviously every company, every exploration company that is showing that they can become an operating mine needs to not wait for someone to take them over and not build the team. I'm a believer that you've got to look at the ultimate stage, which is the ultimate production of the properties or project. So that's why we built a team. We continue to build that team. We strengthened the team about 2 years ago by adding our VP of mining and project. He ran the KGHM operations in Canada. We currently have our project manager at the site, who's also been project manager and mine manager for various mines. We have a great technical team with Attila Pentek, who's our VP of exploration, but essentially the entire technical team at the site are these ambitious geologists who are, striving to make sure that they find another discovery, as you all know. And so this team is continuing to be built. We have our safety superintendent. We have our environmental superintendent. So we continue to build and strengthen that team. In terms of our directors, the same thing. We have a very good board that is comprised of operators such as Tony McCooch, Warren Holmes, Parvis Fursangi, who was the chief operating officer of Vale, as well as myself, Alar Soever. And recently we realized that we needed to have that legal expertise, and that's why we added Jeff Snow last year to our board of directors in order to do so. So we continue to do that. I understand that the number of directors compared to other junior companies may be larger, but we also are transitioning ourselves. So you're going to see that composition continue to be reviewed by our corporate governance and nominating committee, and be able to come up with the proper composition that matches what a company our size or our position needs.
Okay, that's interesting. I'd love to see that as it happens. So G&A generally, you feel is a bit toppy at the moment. And again, is that something that's under constant review? How do you manage that?
Actually, to be honest with you, our G&A is in line with what the company currently is focusing on. I mean, at every stage of the project, at every stage of our development, we continue to look at it from a point of view of what needs to be added to that. And that's one of the reasons last year we added our environmental superintendent, because we knew that we needed to continue advancing the project in terms of permitting and whatnot. Rather than having consultants to do it, you want your own internal group to look after it. Since then, since about a couple of years ago, we also added the safety superintendent, partly because we did the bulk sample, and we know that we're going to eventually come up with all sorts of systems in place in Quebec, the language and everything else. So in terms of G&A, we certainly always review that in order to make sure we're the best in class in terms of cost, overall. But at the end of the day, we see that we're building it according to the growth of the company.
Okay. Management team and insiders don't have a lot of this company. Is that, why is that?
Well, as the company grows, especially particularly over the past 3 years, because of the equity financings that we needed to do, management could not keep up with being able to participate at those financing when you do 60 or 40 million or $60 million of financing. We certainly today have about 1.8%, whereas before we had much higher than that. But that's just as a result of the success of exploration and being able to continue to do that. So.
Okay, but you're still buying in the open market, are you?
Well, today we obviously, the reason is we are in the financial statement stage anyways today. So typically this is the part of the time when the companies typically cannot buy as insiders, because every company's financial statements time until it's revealed, which is sometime at the end of March. Until then, we obviously would not be able to. So.
Okay, but typically you would be when you're not on a blackout period.
In the past, we have certainly. There are people, most of the insiders have either exercised their options and be able to become larger shareholder, if you may, than what they are today.
Okay, just one last question. You in your PowerPoint, you talk about fast track exploration and development company, right? So you've got the money. You're drilling like crazy this year. Are you going to be able to maintain this fast track positioning that you've given yourself?
We certainly believe so, because obviously we see the success in our exploration to date, and we also see what the Maiden resource could potentially come up with, and be able to continue doing that in order to have that access to capital for the future growth of the company.
Right, and as a district, you think that you're the guys to manage the discovery and expansion of this district. You're not going to need to bring in any help from whatever mid-tier big boys, etc. You're not looking for that at the moment.
We certainly think that we have. Obviously, we've demonstrated in less than 4 years. We've had 2 discoveries. We're coming up with a maiden resource in a pretty short period of time. But along the way, if another company comes and knocks at our door and says, "I got a better plan for your shareholders," we'll certainly listen.
Beautiful. Marz, thanks so much. Really enjoyed that. I've read the story previously. I was wanting to speak to you for a long time. I've enjoyed listening to the story and your plans. You're fully funded, a lot of drilling, a lot of communication, ready this year, and a maiden resource. Exciting times.
Thank you very much.